Your first trade in ages, but I'm back. Yeah, price action just been shit recently. Just on when you look at the higher time frames, it's just like all sideways. But like on the daily and the weekly, it's like yeah, it's like there's a trend, but it's very choppy. Like it's just as many down candles there as up candles and up candles there as down candles. And yeah, it's not been good. Start of the year when we were doing well. I think just this year I've learned that you really need to choose your times wisely. Like compared to the start of the year, like we were pretty much killing it at the start of the year, like first 3 months. But now since we didn't, and then I can trade like for a few months here just to get my mind right. But then we're back. Since we've been back to trading, which was like yeah around here, then it's just busted pretty shit, which is unfortunate. But yeah, even so, it's not to say there isn't any trades to take, like there is. This one didn't go away. So looking at the 4 hourly, we're in an uptrend on GU and it's still in an up downtrend from EU, but we were looking, this big 4 hour candle looking on the upside, however, we were still in a downtrend and yeah, so I thought we were going to be carrying on this downtrend. I thought we'd come up, maybe sweep these highs here, and then keep carrying on going down. Yeah, hourly, to be fair, there wasn't much liquidity this side, on the downside. I mean, there was just a few 15-minute targets we was looking at. So yeah, I was just looking at price swept, previous session high on GU, or no, it's EU, sorry. Created an SMT, 15-minute SMT here. Yeah, broke structure, and then we just ironed stuff the break block, the retracement into this break block, and we clearly reacted out of this. One thing I was unsure was to whether or not to take profits here, which would have meant we would have won the trade, because clearly price swept these highs, and then that was enough for it to keep going higher. I guess the bias was just wrong. Yeah, if we look at the daily candle, like the chances, I should have looked at this first, but the chances of this going, it's already gone down, it's already swept our previous day lows. The chance of it coming all the way back up here, like where it is now, and then coming all the way down to break all these levels, just probably just wasn't going to happen. It's not going to happen. We're looking at like we're on a downtrend now daily. Yeah, probably looking at a little daily retracement and carry on the next few days. Yeah. But yeah, so our bias might have been wrong. Let's just go through what else. Yeah, what my psychology was. Yeah, I think I obviously wanted to trade, and the setup occurred. Maybe the bias wasn't completely in line, but I wanted to take it. I weighed out the risk. I knew my bias. It wasn't like I missed that, but I missed. I missed looking at the bias. I did know that price was probably more likely to go up than down. Obviously, that sounds stupid taking a short when you think that, but I just like the look of it. I like the look of that. Have a few of these liquidity points. Big hourly fair value bet. I've got this order block that I would have taken, and then this previous session lows. Yeah, just like that look of it. So I took it. It was a big displacement down as well, which was more confirmation for me. Created a fair value gap. I thought, yeah, cool. This is going to carry on going down. This was my first TP. I think that was an hourly low. Yeah, the hourly low was my first TP. I could have taken it at this 5-minute low. Taking the first TP at that 5-minute low. However, there wasn't anything on the 15 minutes to tell me that was a good point of liquidity, even though it is technically a swing low, which I've just noticed. So there's two types of lows. There's lows where it's like a down. There's a two candle pattern, a down candle and an up candle. That's a low. The lowest point of those two candles is a low. And there's also a low where it's a swing low, where it would be a free candle pattern. For example, this or high works either way. Candle there, first candle, second candle, last candle, the middle candle high is higher than both these two candles, which makes it a swing high, which means it doesn't need to be a down candle like this example here. It might be hard to see. So we've got three candlesticks here, one at 12:30, 12:45, then one, and the middle candle's low is lower than the first and third candles, so that is technically a 15-minute swing low, which I could have targeted, but didn't. Which would have meant we would have been in a winning trade or just like a bit lost a bit less. But it's alright. We probably only have one trade on this 10k. This funded account challenge, I think it was 8%, and we're currently 9,295, so we've got 0.95% to play with on my next trade, which I'll probably just go for the full thing. I'm pretty tired of this one, this account challenge, to be honest. It's been a long one. It's been probably, 2 months? Yeah, I think about 2 months, maybe more, since we started this challenge, and I'm pretty done with it. Which obviously isn't the great psychology, but I've been thinking, since prices just moving shit on forex, on GU and EU, I've been thinking of moving to indices and futures, because it's what my mentor, the person I learned off, it's what he's trading on. So I don't understand. I've obviously just always done forex, so I've just carried on doing forex, but I don't know whether that is the best thing to do. Like, futures apparently do move very well to the S&T models that I use, and my strategy. It would just mean like switching out a few of the time frames a little bit. Not time frames, I mean like the times that I trade. So it's like, I think it's like 9:30 open, which would be 1:30, I think. Yeah, it would be 1:30 instead of 1 open. I don't know the exact liquidity points, but like with forex, it's a very wide range of high volatility times. Like the highest volatility could either be in London session or in New York session, whereas in futures, in indices, it's pretty much obviously always in New York session, which is the highest volatility. So it's a bit more predictable in that sense. But that's just where my head's at the moment with the assets that I trade. Could be moving to indices after this challenge. What I'll do is, after my next trade, if I lose it, I'm assuming I'll lose it. If I lose that trade, then we'll be moving to an indices funded account. But first, I'll be doing a bit of demo. So there might not be. I'll still make some videos just trading on demo. I'll go back to the drawing board and go from there. I think that's all I'll say. It would be nice to take profits at this level here, because as soon as I saw that this fair value gap got reversed, I knew it was cooked. Like, I could have just closed there, but I just wanted to make sure it hit T, stop loss, sorry. And it looks like it will just carry on going up, or maybe just consolidate since it's already gone up quite a lot in London session. That's all I'll say. It's a Monday. It's got a long week ahead. Maybe this week we take another one. Literally haven't taken a trade in, I don't even know, like 2-3 weeks, maybe even a month. So maybe it'll be another month till I take another trade, who knows. Psychology good. I've been staying strong. I've not been taking terrible, bad trades like I was. I am being very patient, still looking at markets every day, still keeping strong and sticking to my strategy and only taking the best trades Even though this one's kind of slip up on that. But it's alright, not too fast. Yeah, that's all I've got to say. Catch you in a bit.